Every year, there's an invisible force quietly reducing the value of your money. You don't see it, but you definitely feel it, especially when you notice that your income buys less than it used to. This force is called inflation. It's not a sudden event, but a slow, steady process that affects everyone. Whether you're shopping for groceries, paying rent, or saving for the future, inflation is always at work in the background, making things just a little bit more expensive each year. Let's explore how this silent thief operates and why it matters to your financial well-being. Might not notice inflation day by day, but over time its effects become clear. Prices for everyday items slowly creep up and the same amount of money just doesn't stretch as far as it used to. Maybe you remember when a loaf of bread or a tank of fuel cost much less. That's inflation at work. It's not just about numbers on a receipt, it's about the real impact on your lifestyle and choices. As costs rise, you may find yourself adjusting your budget, cutting back on extras, or searching for better deals. Inflation quietly shapes your daily life. So imagine you save 1,000,000 and leave it untouched for 10 years. It feels safe sitting in your account unchanged. The number stays the same and you might feel secure knowing it's there. But here's the catch: while your money sits still, the world around it changes. Prices rise and what your money can buy slowly shrinks. Saving is important, but it's not always enough to keep up with the changing value of money. Over time, your savings lose their power, even if the amount never changes. After 10 years, your 1,000,000 is still there, but it doesn't go as far as it once did. What used to cover many needs now covers much less. Inflation didn't take your money, it took its value. This is the hidden cost of simply saving without considering how inflation eats away at your purchasing power. It's a slow process, but over a decade, the difference becomes impossible to ignore. The safety of saving comes with a price: the quiet erosion of what your money can actually do for you. It's easy to overlook inflation because it doesn't make your bank balance smaller. Instead, it quietly reduces what your money can buy. Over time, the impact is significant. That's why understanding inflation is so important for anyone who wants to protect their financial future. It's not just about how much you save, but about how much your savings can actually do for you in the years ahead. Let's look at how you can fight back. Imagine you take that same 1,000,000 and invest it instead of letting it sit idle. At first, the growth might seem slow and almost insignificant. You might wonder if it's worth the effort. But investing is about more than quick wins, it's about letting your money work for you over time. With patience, your investment begins to build on itself, growing little by little. This is where the real power of investing starts to show. Compounding is the process where your investment earns returns, and then those returns start earning returns too. It's like a snowball rolling down a hill, picking up more snow as it goes. At first, the growth is slow, but over time it accelerates. The longer you leave your money invested, the more powerful compounding becomes. This is how small, steady investments can turn into significant wealth over the years. You invest, your money doesn't just sit there, it multiplies. Even if the growth seems slow at first, it builds momentum. Over 10 years, the difference between money that's invested and money that's simply saved becomes clear. Investing gives your money a chance to grow faster than inflation, helping you keep up with rising costs and even get ahead. It's a long-term strategy that rewards patience and consistency. Here's the real battle. Inflation quietly pushes prices up year after year, while investing gives your money a chance to grow faster than that rise. If your money grows slower than inflation, you're effectively losing value without realizing it. The goal is to make your money work hard enough to outpace inflation so you don't fall behind. This is the challenge every saver and investor faces. If your savings grow slower than inflation, you're losing value even if the numbers look good on paper. It's a silent loss that many people don't notice until it's too late. That's why it's so important to understand how inflation works and to take steps to protect your money. Investing is one of the most effective ways to do that. This is why two people earning the same income can end up in very different financial positions. One person saves but doesn't invest, while the other invests and lets time work in their favor. Over the years, the gap between their financial security widens. The difference isn't just about how much they earn, but how they manage and grow their money. Saving feels safe. You know exactly how much you have, and there's comfort in seeing your balance stay steady. But over time, this safety can be misleading. As inflation rises, your savings quietly lose ground. The money is still there, but its power is fading. It's a slow process, but it can have a big impact on your future plans and dreams. Investing feels uncertain at first. There are risks and the future isn't guaranteed. But over time, investing is the only way to stay ahead of rising costs. By putting your money to work, you give it a chance to grow and keep up with inflation. The key is to start early and stay consistent, letting time and compounding do the heavy lifting. So who wins, inflation or investing? If you do nothing, inflation wins by default. Your money loses value and you fall behind. But once you start investing, even in small steps, you begin to fight back. Every bit of growth helps you protect your future and stay ahead of rising costs. The choice is yours. You don't have to start big. Even small investments can make a difference over time. The important thing is to begin. As your money grows, you'll see the benefits of compounding and the power of staying invested. Every step you take is a step toward protecting your financial future. The real win isn't just about making more money, it's about protecting your future from the effects of time and inflation. By investing, you give yourself a better chance to achieve your goals and maintain your lifestyle no matter how prices change. It's a long-term strategy that pays off in security and peace of mind. Inflation is the general rise in prices over time. It means that each unit of currency buys fewer goods and services. This is why your money seems to lose value even if the amount doesn't change. Understanding inflation helps you make better decisions about saving and investing for the future. Prices rise for many reasons: increased demand, higher production costs, or changes in supply. Inflation is a normal part of most economies, but it can be challenging if your income or savings don't keep up. That's why it's important to have a plan for your money that accounts for inflation. If you do nothing and simply save, inflation will quietly erode your wealth. Over time, you'll be able to buy less with the same amount of money. This is why it's risky to rely on saving alone. Taking action, even in small ways, is essential to protect your financial future. Investing means putting your money into assets that have the potential to grow in value over time. This could be stocks, bonds, real estate, or businesses. The goal is to earn returns that outpace inflation so your money not only keeps its value but grows. All investments come with some level of risk. The value of your investments can go up or down, but over the long term, investing has historically provided better returns than simply saving. Understanding and managing risk is key to successful investing. The earlier you start investing, the more time your money has to grow. Compounding works best over long periods. Even small amounts invested regularly can add up to significant wealth over time. Time is one of the most powerful tools you have as an investor. Investing isn't about making one big move, it's about being consistent, adding to your investments regularly and staying the course even when markets fluctuate. Consistency helps you take advantage of compounding and smooth out the ups and downs. The main goal of investing is to grow your money faster than inflation. If your investments earn more than the inflation rate, you're gaining real value. This is how you protect your purchasing power and build wealth for the future. Waiting to start investing can cost you valuable time. The longer you wait, the harder it is for your money to catch up with inflation. Starting early, even with small amounts, gives you a big advantage in the long run. Saving and investing both have important roles in your financial life. Saving is great for short-term goals and emergencies. Investing is essential for long-term growth and beating inflation. The key is to find the right balance for your needs. Before you invest, it's wise to build an emergency fund. This is money set aside for unexpected expenses like medical bills or car repairs. An emergency fund keeps you safe while your investments grow for the future. There are many ways to invest: stocks, bonds, real estate, mutual funds, and more. Each type has its own risks and rewards. Diversifying your investments helps reduce risk and increase your chances of success. Diversification means spreading your money across different types of investments. This way, if one investment doesn't do well, others can help balance things out. Diversification is a smart way to manage risk and grow your wealth steadily. It's important to review your investments regularly. Markets change and your goals might change too. Checking in helps you stay on track and make adjustments if needed. Staying informed is part of being a successful investor. Investing isn't always smooth. There will be ups and downs, but staying the course is key. Don't let short-term changes distract you from your long-term goals. Patience and discipline are your best allies. You don't need to know everything to start investing. Learning as you go is part of the journey. There are many resources available to help you understand the basics and make smart choices. The most important step is to begin. Many people make mistakes when they start investing, like chasing quick profits or panicking during downturns. The best approach is to stay calm, stick to your plan, and focus on long-term growth. Avoiding common mistakes helps you succeed. Patience is one of the most important qualities for investors. Growth takes time, and the biggest rewards come to those who wait. By staying invested and giving your money time to grow, you increase your chances of beating inflation and reaching your goals. Every step forward is worth celebrating. Whether you start with a small investment or a big one, the important thing is that you're taking action. Over time, you'll see your progress and feel more confident about your financial future. Investing is a key step toward financial independence. By growing your money and staying ahead of inflation, you gain more control over your future. Financial independence means having choices and security no matter what life brings. Your dreams, whether it's owning a home, traveling, or retiring comfortably, depend on how well you manage your money. Investing helps turn those dreams into reality by growing your wealth and protecting it from inflation. Good financial habits like saving regularly, investing consistently, and reviewing your progress make a big difference over time. These habits help you stay on track and reach your goals no matter what challenges come your way. Many successful investors started small and learned as they went. By studying their stories and strategies, you can avoid common mistakes and find inspiration for your own journey. There's always something new to learn in the world of investing. It's easy to lose motivation when progress feels slow. Remember, investing is a marathon, not a sprint. Celebrate your milestones, stay focused on your goals, and keep moving forward. Motivation grows as you see results. Life changes, and so do your financial goals. It's important to adjust your investment plan as needed. Flexibility helps you stay on track even when things don't go as expected. Review your goals and make changes when necessary. If you're unsure where to start, consider seeking advice from a financial professional. They can help you create a plan that fits your goals and risk tolerance. Good advice can make a big difference in your investing journey. The world of investing is always changing. Staying informed about market trends, new opportunities, and financial news helps you make better decisions. Knowledge is power when it comes to protecting and growing your money. Everyone's financial journey is unique. What matters most is taking action to protect your money from inflation and grow your wealth over time. With patience, consistency, and smart choices, you can build a secure future for yourself and your loved ones. Inflation is always working in the background, but you have the power to fight back. By investing, you give your money a chance to grow and protect your future. Start today, stay consistent, and let time and compounding work for you. Your future self will thank you.